Well, as expected, the Federal Reserve has taken no new action after a two-day policy meeting. The board admits it will take time to assess whether aggressive stimulus measures launched in September will boost growth and job creation. Let's get more on how the FOMC statement is impacting commodities trade with Larry Shover, Chief Investment Officer at SFG Alternatives. Larry, thanks so much for joining us. Gold always fairly volatile ahead of these FOMC announcements, but are we seeing physical demand from emerging markets at least act as a bit of a backstop?
I think so. I think people were expecting just a little bit more, and I'm not really sure why, because really Bernanke is going to put some kind of growth metrics as opposed to time metrics, and I don't think the street was really expecting that until later on this year, maybe towards the end of the year. But it is creating some sort of backstop, no doubt about it, that they're going to keep rates low from here until the employment figures get better. So that's going to be quite a while. But again, it was a little strange because at first it seemed like the street, the trading community in the United States wasn't expecting a whole lot out of Bernanke. But after he spoke, it seemed like they were expecting more, and that's why we just kind of drifted it lower towards the end of the day today.
Yeah, we didn't see much. Nothing that caught your eye?
Well, I think everybody's expecting some sort of silver bullet. I mean, I think they're expecting him to come out with a little bit more vernacular, as it were, just saying like growth metrics, like unemployment has to be at a certain rate, inflation has to be at a certain target. And he didn't say that today. But again, even a week ago, no one's expecting him to say something like that today. I just think with the sell-off that we've seen in the U.S. stock market since Friday, I think perhaps there was some type of outlier that maybe he would say something a little bit more than he did.
Hi, Larry. Chris Stott here from the studio in Sydney. To what extent do you think the recent sell-off in the last week has been driven by reporting season over in the US, with a lot of these results disappointing?
Yeah, I'm sorry, I missed the last part of the question.
Just saying, Larry, that to what extent has the recent sell-off in the US market been driven by disappointing corporate earnings reports that we've seen in the last week or so?
Yeah, it's really funny what's happened here in the U.S. because up until Friday, we look at July 26th when we had the Bumblebee speech, up until Friday this past week, or last week, the market was very macro-focused. I mean, we were focused on China, on Europe, on our own U.S. fiscal cliff and our elections, and we cared very little about earnings because earnings guidance has been walked down for the past 3 or 4 weeks. All of a sudden on Friday, everything changed where our U.S. stock market became very micro-focused and really didn't worry a whole lot about Greece or Europe in general or China or our own fiscal cliff. Now all of a sudden everybody's worried about the inference of bad earnings, but that's something that's been baked into the market for quite a while. So it's a very confusing time. And I think right now what we've seen is just a lack of buying interest in the stock market. People are very lethargic, very confused, and in a general stupor about the whole thing.
So then what are you trading at the moment, Larry, in these confusing times?
What am I seeing at the moment is just one thing is I'm just seeing a dearth of buying interest. I mean, everybody's kind of just hidden right now. I mean, the shorts aren't, I mean, the bears definitely are dictating the agenda right now short term. However, if there was really selling interest, our market would be falling even further today than it was. I mean, the S&P 500 held. It held above that very key 1,400 level. So it tells me that people just aren't interested right now and are just waiting for everything else to play out before going forward with the next move in the market.
Is that what you're doing at the moment, Larry? Are you sitting on your hands or are you out there buying?
Well, right now it's just a lack of buying right now. And really, I view stocks as being on sale. I mean, we've had a tremendous rally since the end of July, and really it's been a straight line. And right now, it seems to be just a healthy consolidation in the stock market. I mean, we have rallied since July 26th on just news from the Bumblebee speech. And right now, we're just consolidating. I don't think there's a whole lot of fear. It's just a general lack of interest right now.
Hi, Larry. What catalysts are you looking for over the next 2 months going into Christmas to really drive the US market forward?
Yeah, well, in the U.S. markets, it's depending on, what part of the market, but the general market, I'm still seeing the market continuing to rally because it's relative to everything else. When people realize how expensive bonds are right now, and the fact is that our PE ratios are 14.5%. That's the cheap side of history right now. So it's all relative. Equities against MLPs or against cash or against REITs or against bonds are fundamentally cheap. So it would make sense for the stock market to continue to rally. I don't think it's going to be a straight line, but I do believe there will be a beta chase between now and the next 3 months.
Okay, Larry Shover, Chief Investment Officer at SFG Alternatives. Thanks for joining us.